Hi guys, today we talk about LuluLemon that seems to be a very interesting stock from a value investing perspective. The stock is going down and down and down, but it was going up a lot in the past year. A lot of value investors on YouTube are talking about this stock. We need to understand whether it's a good buy for our portfolio and is a stock that will give us a lot of gains in the future year. I will try to do that. Don't forget to like and subscribe the channel. But let's first give the word to the expert analyzing LuluLemon.
Wednesday, as we wait an opening bell 2 minutes from now. You want to talk a little more Lulu, which you mentioned briefly.
Yeah, no, I'm a little, I'm perturbed about Lulu, not interested in buying it yet. I do think it's a great company, but David, three pieces cut price target. Morgan Stanley 490 to 404, Cowen 515 goes to 437, and then Citi 500 goes to 415. The problem with all these, David, is that the stock is at 295.
Yeah.
So, I mean, the value added here is not that great. But Citi does say the sentiment's gotten too negative. But the others talk about price competition. You know, there's Athleta out there. There's a bunch of private guys. And I just can't get my arms around it. But I will tell you that when you have a stock that's down like this in this market, they tend not to bottom. So it doesn't report until the first week of June. But as you can see, this was another darling.
So it's just the worry is about price competition, generally speaking.
Yes, price competition. The Athletas of the world.
Yeah.
And also, David, back to work has hurt them.
Because people don't buy anything for back to work.
Well, people have to look a little better when they go back to work.
Yeah, but they don't go back to work. So is that why? What?
No, people are going back to work.
Oh, they are?
Yeah,
so that's hurt them because
people have to dress
they're
up.
not back to work.
Well, you can't wear their stuff.
You can wear their pants. I wear those Lulu pants.
You go to JP Morgan.
I'm not working 5 days a week.
JP Morgan, you can't wear Lulu. I got the memo.
Alright guys, so if you see the objections from Jim Cramer is that people are not buying these clothes anymore because you cannot go to work on JP Morgan with these clothes. During the pandemic, people were buying more, this kind of stuff. Right now, they are not buying so much. But I mean, here I see a lot of things for sport. And these things are, I see a lot of people doing sport, especially now that we have wonderful weather. Maybe yes, during the pandemic you needed more of this stuff, but I think these are still things that people buy. The concern could be, yes, price competition, because I see these things being expensive. You see, for this sleeveless shirt, 70 euro would I pay? No. I think it's even like more expensive than Nike or Adidas, and it's a direct competition. You see, free underwear, 70 euros. Short trousers, 70 euros. Like this kind of jacket here, 170 euros. 90 euros for the polo. So it fits this company a bit in the luxury category for sport, which makes it difficult to convince people to buy these kind of things at these prices, I think. But the business is very simple to understand because, yes, like, you know, you sell clothes. So yes, there is a lot of competition, but in spite of the competition, I mean, this is not a pandemic stock. This is a stock which was growing a lot, you know, for many, many years. I mean, it grew a lot. So it has to be something special. Okay, yeah, we need to say that was flattish for 6 years, from 2012 to 2018. And then, yeah, even before the pandemic, they started to grow a lot. So the question is the brand solid enough to be successful for the future? Is the company doing something to grow consistently? These are, I believe, the main questions we need to ask ourselves analyzing this company. So guys, the question we need to ask ourselves is, will they continue to sell their t-shirts at 150 euro price, or will they not? I think this is like the key reasoning behind this company. Of course, the product is not unique, there is competition, But on the other hand, also Nike had competition and was a very, very big multi-bagger across time. So the question is, will they continue with margin expansion and so on? We see that there is clearly one insider who might see things, of course, better than all of us, which have put here over $1.5 million. So he's really convinced that this is a very, very good buy. So this is like the first thing I wanted to show you. The second thing I want to show you, yes, a bit of insider. There is super investor. There is every month some traffic. Someone is buying, someone is selling, but not very big positions. Like they are not making these the main positions of their portfolio. You see here 0.03%, 0.02%, 0.12%. They are doing very, very small increases or decreasing, like a couple sold 100%, but this Lee Ansley, I would like even that Aroma removes here because every month is in and out, is simply confusing. I don't know if they have results of super investor, but I think it's confusing. Anyway, here is a mixed picture. I mean, it's not yet, because right now the stock is a lot lower. We don't have like a clear pattern. Let's have a look at the financial. I want to look especially quarterly because like over years, this was like growing like a rock. Like in terms of the quarters, I want to see the last trend, especially in revenues, because that's what the company does. So if we look, first quarter, 3,200,000 versus 277. That's a big increase. You see, we still have important changes year on year, all positive in terms of revenues. So this is still good, even if the company soften. The net income is also growing, even massively, but we trust less these than revenues because here there can be a lot of accounting things that can go up and down. So yes, I mean, the stock appears good. The stock really appears to be good. They are expanding in Europe, which I think is a driver for the revenues. We don't have this segment here. Let's go now in the investor presentation to see better their plan to grow. All right, guys, let's have a look a bit more at the financial. So here is like a couple of presentations from LuluLemon from the last earning result. This is very nice because it projects like the numbers very easily. Revenues up 19% year over year, EPS up 27% year over year, total comparable sales plus 14% year on year. So all very good. Store revenues plus 15%, digital revenues plus 17%, international revenues a staggering 54%. So the company like firing on all cylinders. Very good results for the year. And like if we look better at the financial, like the same. We see the region that is very good. Americas, that's an important point. America is 81% of total revenues, which means that this company is growing 7% in America, where it's at a mature market. But China and Europe, rest of the world, are 9 and 9%. So there is a lot of margin to increase in these countries where the company is trying to penetrate and could be a good driver for growth. Whether this company is able to work well with Instagrammers and be able to sell the product. They are they are reducing the number of shares, which is also a very good thing for the company because they are reducing. And they are even reducing capital expenditures, which could be good or bad. The company has an A+ balance sheet. So there is a lot to like in this company, but the reason why the company is struggling is the guidance. Because let me show you the guidance. Yes, the entire guidance for the four metrics was below analyst expectation. there is a 9 to 10% guidance in revenues year on year. There is a 3 to 5% guidance in EPS for the quarter, and then a 9 to 10% for the year, which were less than Wall Street was expecting. And right now, I will show you, as per my tool, how much the stock is worth. Because, the company doesn't pay a dividend. Here, the results of income was growing very greatly in the last year, 20%. As a fundamental growth, calculated as per Damodaran formula of 15%, because it's investing a lot, it's investing well. So there is a chance to grow, is reducing shares, has a 0% debt. So the company, looking at the financial metrics, should be worth also a multiple of 34. It's trading at the 27 diluted earnings, so appears like 20% undervalued. And doing discounted cash flow at a, let's say, a 15% growth, as we are getting from the formula, appears incredibly undervalued, minus 172%. So is almost a 3x from here if they are able to grow at 15%. If they are not, let me show you. If they grow at 5%, 3707, here is with my growth at 5%, still the company is a 25% gain from here. The question is, will they shrink? Will they go collapse? They will not be able to sell any share. And let me tell you that if the company, instead of growing, start reducing, even a couple of quarters, start to have a 0% growth, let me show you, if the company start to have a 0% growth in one quarter, which is really possible, because we can enter a difficult economical situation, the company then is overvalued, because then the market will start to assume a 0% growth for the next years. But still, even assuming a 0% growth from current level, the company still gives me a value of 250, which is not too bad. So I believe that the company is quite a buy. It's quite a buy financially, has no debt, is growing, is expanding the new market. The risk is that they stop growing for a year or two. Then it can go even to the low end of the 200. But starting a position in such a good company, because maybe will not stop growing, maybe a small position, just to make it part of your portfolio, and then when it goes to the 200s and will start discounting, there is really no growth, then will be a super buy. Let me know, guys, in the comments what you think. I have also a Patreon portfolio in case you want to join with my buys, but I have currently no subscribers, so I'm not updating it. Just $5 a month if you want to join it. Then I will restart publishing my portfolio. Thank you, wish you a wonderful day.